edition of the Bourse Report. I'm Carissa Gubin, an investment analyst at Bourse, and today I'll be filling in for Sarod. So this morning we'll be looking at the financial performance of two companies that operate in the manufacturing sector, Unilever Caribbean Limited and National Flowers Limited, for their respective 9 months period ended September 30th, 2025. Both companies would have benefited from improved profitability margins that led to greater reported earnings. So firstly, let's take a look at Unilever Caribbean Limited, or UCL. UCL reported a total earnings per share of $1.73 per share in a 9 months period ended 2025, up 133.8% from 74 cents in a prior comparable period. This total earnings per share reflects contributions from both continuing operations and discontinued operations. Earnings from continuing operations amounted to 86 cents per share, up 16.2% year-on-year. The remaining 87 cents was generated from discontinued operations, as the group would have recognized a one-off gain from divesting its ice cream business and laundry brands. Reported revenue stood at $144.9 million, down 16.3% from $173.1 million in 9 months 2024. However, the company would have noted that revenue, excluding discontinued operations, actually grew 11% year-on-year. Gross profit margin fell 12% to $70 million in the 9 months 2025. Operating profit after restructuring costs improved 15.9% to $32.4 million, and profit before tax grew similarly, up 15.6% from $28.5 million to $33 million. Overall, profit for the period after taxation, which includes both profits from continuing and discontinued operations, amounted to $45.5 million in the current period, up 134.7%. Taking a look at UCL revenue trends, there has been some volatility, which is the expected outcome given the significant reorganization to the business model over the prior years. As mentioned, revenue excluding discontinued operation would have increased 11% year-on-year from an adjusted 130.5 in 9 months 2024 to $144.9 million in 9 months 2025. According to this, growth in revenue was achieved due to its growth in its beauty and personal care segment. Going forward, there should be some degree of revenue stabilization, reflecting a more consistent performance across the company. UCL reported consistent improvement in profitability margins over the last 4 comparable periods, with a sharp year-on-year increase. Gross profit margin grew from 46% in 9 months 2024 to 48.3% in the current period. Operating profit margin increased from 16.1% to 22.6% in 9 months 2025, largely due to lower selling and distribution expenses, which were likely supported by efficiencies from the group's new local distribution model. This translated to a profit before tax margin of 22.7%. At a price of $18, UCL trades at a trailing PE ratio of 8.6 times, relatively in line with the combined manufacturing sector average of 9 times. It should be noted that its trailing PE ratio, excluding discontinued operations, amounted to 14.8, an elevated 14.8 times. The stock offers investors a dividend yield of 31.4%, well above its sector average of 11.9%. This dividend yield is viewed as highly skewed given the extraordinary dividend that the company would have declared of $4.18 per share, plus an interim dividend of 38 cents per share, totaling $4.56 per share payable to shareholders on December 15th, 2025. The exceptionally large dividend resulted from the one-off proceeds from the group's sale of assets, particularly its ice cream business and laundry brands. The recent reorganization of the UCL business paves the way for more normalized operations, particularly particularly in terms of earnings and dividend consistency going forward. So, on the basis of improved margins, attractive dividend yield, and more normalized operations, as mentioned, Bourse maintains a market rate return on stable for the time being. Moving on quickly to National Flour Mills or NFM, the NFM generated an earnings per share of 34 cents in 9 months 2025, a modest increase of 3.7% from 32 cents reported in 9 months 2024. Revenue amounted to $401.5 million, growing 4% year on year. Gross profit margin increased 11.8% to $129.8 million. Operating profit advanced 9% to $50.3 million despite higher expenses faced by the group. Profit before tax grew 8.2% to $49.1 million, and overall profit after tax amounted to $39.8 million for the current period. Taking a look at NFM revenue trends, so NFM experienced 3 periods of consistent revenue growth from 9 months 2021 to 9 months 2023, peaking at $431.3 million. Revenues would have experienced a dip in 9 months 2024, but rebounded in the current period to $401.5 million. This occurred even after the company would have taken a decision to lower consumer prices over the course of 2024, sharing the benefits of falling commodity prices and lower input costs with its customers. According to the group, this increase in revenue was supported by the rebrand of its Ibis flour brand and growth in its feeds division. NFM operating efficiency improved as reflected by expansion in its profitability margins. So gross profit margin improved from 30.1% in 9 months 2024 to 32.3%. Operating profit margin increased from 12% to 12.5% despite higher expenses, and overall profit before tax margins stood at 12.2%. This signals improved profitability as NFM generates more profit for every dollar of revenue. Taking a look at NFM dividend history, it has been quite inconsistent over the years. For fiscal 2023, the group would have paid a final dividend of 10 cents. However, investors should note that for fiscal year 2024, the board would have recommended a final dividend of 12 cents per share, but the approval remains pending due to the postponement of the company's annual general meeting. At a price of $1.50, NFM trades at an attractive trailing PE ratio of 3.9 times, below its sector average of 9 times. On the basis of modest revenue growth, improved margins, but tempered by higher expenses, Bourse maintains a market rate return on NFM with a stable outlook for the time being. And that brings us to the end of this week's edition of the Bourse Report. For more information, please give us a call at 226-8773 or email us at info@boursefinancial.com. And thank you for joining us, and we'll see you next time on the Bourse Report.